Why are you failing with the smart money concept? The first thing you need to understand is that 90% of the people are losing with that kind of strategy. Why? Because there is much more possibility with the strategy that if you don't align pretty well the different concepts, you will likely fail because one concept will never be sufficient for taking an entry and be sustainable on the market. I prepared into this video 3 different chapters. These chapters will be the common mistake that people are making with the smart money concept and what they make them fail. The first chapter will be the high time frame direction versus the internal structure. This is a place where most of the people are failing because they have a big misunderstanding between the structure and the internal structure, aka also the order flow. And there is a lot of people sending me trades with no following of the high time frame narrative, and they're asking themselves why their trades doesn't hold. The second chapter of this video will be simply the zone selection. A lot of people are also not taking care of the concept in order to choose the right POIs. They have 20 POIs on their chart and they don't know which one to take, which one will be the one that will work, that will have the more probability to work. And in the first chapter, the last one, we will see also the SMC traps. So as smart money trader, we are also subject to traps. Okay, we are also liquidity for the big bank and the big industry into the trading. So we need to be careful about that, and we need to understand where are the SMC traps. Okay, let's start this video by the first chapter. We'll see, as always, firstly schematics before going into the real market for the real example. So basically what most people are misunderstanding is that we need to follow the high time frame direction instead of following the actual order flow of the market every time. So what I mean by that is that the high time frame direction will always plays out. That doesn't mean that if you are bullish, price will go up without retracement. Price will need to retrace and create a lot of liquidity in the retracement. But if you are a beginner and if you are struggling with smart money concept, please go step by step. If you are not able to take the best trade when you are in counter trend, I would say, if for example you have a high time frame that is bullish and you have a lower time frame that is bearish, you are in counter of your high time frame direction, and this is a place where the trade has less probabilities to work. So at first, if you are a beginner, I will advise you to always follow the order flow when this one follow your high time frame direction. So in this example, you will be able to trade since this area, since price has the delivery of his high time frame demand, as price is bullish, you will be able to trade the order flow, the bullish order flow after the delivery. Like that, you will simply follow the high time frame direction in a lower time frame, and you will have much more probabilities to take your trade. In the retracement area, price will commonly make a lot of sweep of liquidity that will induce a lot of people making the wrong move, and also sometimes it induces people that the structure is changing. So for example, some people here, as we have some break, some internal break, people will think here that we are bearish and will take sell without taking care of the high time frame direction, without taking care of what we had on the left. Also, when you are in the retracement phase, price will have less momentum. Why is that? Is because market maker will induce people to create buy and sells in the market, will make the people misunderstand what the structure is like, so they will create a lot of liquidity. So when the price will follow its high time frame direction with its POI delivery, price will likely have a lot of momentum because it will now be able to sweep all of that liquidity for the people that think that we are basically in a bearish market. I can promise you that if you focus on the high time frame direction and align the order flow with your high time frame direction, your win rate will go up 2 times. When I did that personally, it was a game changer, because with all the trade that you see on the social media, with all the trade that people are taking, you think that you are dumb because you don't follow the markets every time. But I can assure you that you are not dumb. Clearly you are more intelligent, because you only focus on what you can do and what you can control, if I can say like that, because you know that you will have much more probabilities when the order flow is aligned with your high time frame direction. So you will only wait for that kind of setup to show up. For the first example, we are here on the GU. So basically my H1 time frame will be my high time frame direction, and my M5 time frame will be my lower time frame. So as we can see here, market is bullish, so we are making high, low, high. As we can see here, price start to lose its power and start to pull back. As we can see here, the demand that made the last break in the market structure doesn't hold. That means that price can do 2 stuff: either use that as liquidity, or either use that to make its first change of character and then react from that charge in order to switch in the trend. So how can we know that? Simply is we will identify different stuff here. We'll identify where is the liquidity, where is the momentum, and where is the potential imbalance. So here, as we will be able to see, we'll have some liquidity at this area as sell side liquidity. This liquidity wasn't sufficient for that POI in order to hold, and there is a why behind that is that, as we can see here, price doesn't have any momentum. This push here is only to induce people that the price will start to go down. From that, we will be able to identify a new liquidity which is below the church, and we will have that liquidity here. When we have a liquidity area like that below a church, is interesting to look at the previous structure. Here, as we can see, we had a pretty nice high, pretty nice higher low with a nice push to the upside. We got a rejection here, but at least price continues. So from that, if you follow also my video on the structure, if you don't see it, it will be able on the right corner of the video. But I see the structure completely differently than the others. Why do people will think here is that when we have a change of character, price will make a high and then a low, and we will have a break in the market structure that will confirm that we are now bearish. For me, it's not like that. For me, we need to break a second low on the left, which means that we have this structure. So this will be the low of the church, and this will be the protected low of the markets. So I will not consider any sell before price has broken this low here, which is the protected low. And as I can see, at this low, I have a nice demand area. This demand area has a bit imbalance left. Here we are mitigate, but here we have a bit imbalance left. We have all of that liquidity that will induce a lot of people, because as I said to you here, most people will likely follow the change of character to continue, because they will think that the price has turned bearish. And this is where the high time frame directions plays a big role into the understanding of the structure. I'm gonna play the price, and as you can see after the delivery here, the move isn't at the moment the best move that we had, but at least we finally goes up into the market structure high, and we will now focus on different legs here. The first one that is here and the other one that is here, and we will see the difference between the setup that we can take. Let's go through the first leg, which was the counter trend leg. So as we can see into the 5-minute time frame, which is the lower time frame, price made a change of character and then a break in the market structure. From that we create a high. All the beginners will react from the high that made the break in the market structure. So firstly, the beginners will get tagged into a setup here, will go highly in profit before getting swept by the markets. This is where the people with more rules and more knowledge will enter. In this case, we have a nice entry which gives 6.6 here. This entry here creates a nice break in the market structure, which creates a nice supply demand. As we can see, we have inducement before that supply demand, we have momentum, we have a sweep here, so that makes a nice supply demand to trade. Price here gives only 4.4 return on a trade that takes a lot of time to be closed. And as we can see into the bearish leg, those are the common trades and the main trade that we have, because after price didn't really react to valid zone that we can enter from, and so on. Here we risk money and we have less returns. So if you are a beginner, if you are an advanced trader, for sure you will understand how to trade that clearly. But if you are a beginner, I will advise you to wait in this kind of area. Wait for your high time frame direction to align. And as we can see, price here doesn't show any entry criteria that we are able to use. Okay, so clearly price, we cannot even take any losses here. Price after the sweep here creates a change of character at this area. We have a pretty nice entry, we have a lot of liquidity, we have momentum, we have a sweep. That's a pretty nice entry here, and as we are following the high time frame direction, the potential of the market is to follow the structure and to create a new high. So basically those are not the trade that I take, because personally I want to close my trade at the end of the day. But here I'm just here to show you the potential that we have with a bullish trend instead, when we are in pro trend, so when we are following the pro trend, than where we are in a counter trend. So basically here it offers a 17.5 here, and as we can see into this market structure here, so here during the night price was likely rangy, and as we can see price creates a very nice demand with momentum. We have liquidity, trendline liquidity. I'm gonna mark it much better. We have a trendline liquidity. Price creates also almost equal here. So we have sell side liquidity to swap and buy side liquidity to take here. As we can see, after the reaction, price gives a pretty nice impulsion, so you are fastly, if you are taking the break even here, you are fastly at break even and you don't risk anything. I remind you that the best in trading is to protect your capital, and by protecting your capital you will grow it. From that bullish momentum we got a new low with liquidity. Price create a fake structure. Most of the beginner will enter here, that will create liquidity for the POI that we have below. POI which is in a higher time frame, as 10 minutes or 50 minutes. Here same thing, price break the market structure to the upside As we can see here, there is no really structure relevant. This is much more liquidity than anything else. And as we can see, after the reaction into the POI, price ran into its higher time frame low. And if I come back into the 1 hour here, as I can see is that I clearly follow the high time frame direction here. And price use all of the liquidity where people get induced here to get off and take that swing high here. So this is a common model that you will find, and I'm gonna precise something is why am I using a break of structure into the second low is simply because most of the time now such change of character are used as liquidity for a POI that we have below or above depending the market structure. Second chapter of this video will be the zone selection. So most of the time when you are in the leg, price will not create only one zone. And to find which is the best zone, for me there is a few rules that you need to follow. So of course, as you know, trading is a business of probabilities. So those are different rules that you can add to your zone, but this will not assure 100% that your zone will work. This is just to add probabilities. The first rule will be the break in the market structure. So in this leg with the 3 zone here, basically, as we know here, we made a change of character. So we have the break here, and here we have an internal boss. So at this moment here, this zone will be not useful because it doesn't break market structure. Price can literally just sweep that and comes back. So we need clear break of market structure. Also, we need a clear break of market structure with something with a lot of momentum. So for example here, if price break here the market structure and then directly come back here, we do not have a big momentum into this break of market structure. So this could likely be used more as a sweep of liquidity, and this will be used as liquidity. The third rule, that we will need to use is to find where is the imbalance in the price. And to know where is the imbalance in the price, we need to understand where is the imbalance. And basically, the imbalance will be the gap between your wick when you have a complete candle. So in this case, those 2 zones here as likely imbalance. And the last rule will be simply liquidity, if we have liquidity to fuel our zone. And so at this point here, the zone with the more liquidity will be the extreme one. So if I would have to take one of the zone, that will be this one. And with those rules, I can identify which are the best POI. For the real market example here on GU on the M5 time frame, so basically what am I doing is I will mark my structures. So I have a high here that has been broken with this here. From this leg I have the extreme here, which is the doji here. As I can see, the doji as here being mitigated by this wick. So I'm gonna take this wall zone here as my first demand. After, I'm gonna mark the structure again. So here the structure isn't the best. As I can see, we have a break We have the creation of the demand here. Price has already hit it, so it's already mitigated. We have another break in the market structure about this area. So this is more likely internal structure waiting the swing structure here. As you can see, price has unmitigated after the break. And so here we have also that decisional here already mitigated. I'm not gonna mark it. And we have a last break here in the market structure. So basically in this leg we have all of those zones here. We have the first one, second, the third, and the fourth. So as we can see in the first one, we have a break in the market structure, we have momentum, and we have a bit of liquidity. In the second one here, we have a break in the market structure. We don't have a lot of momentum, we do not have imbalance, and we have liquidity. The third one here is already mitigated, and for the fourth one, we have momentum, we have imbalance, we have liquidity, and for sure we have the break in the market structure. For that zone here, we have all of that liquidity, which is a pretty nice trend line liquidity. And so what most people will do here is both enter from this or this zone. We can clearly see here, even if price here potentially break the market structure to the upside, we can clearly see here that market is losing powerful. I'm gonna play the price, and as we can see, price doesn't even react to that zone. So even you have a zone with break in the market structure with momentum, you have to keep it real and understand that here we have a lot of liquidity. We have a lot of people that are buying from here, from here, from here, from here, from here, from here, from here. And so if we want to continue a bullish move, we will need to induce the maximum of the people doing the wrong thing. And so it will not be the best thing to take an entry here, and it will not be the best thing to take an entry here because there is still a lot of buyers into this area and market doesn't want them. So we will need to wait for all of those low to sweep. And what's the zone below those low? Our last zone below this zone will be this one. You can only take, if you want, the M5 one, but personally I'm gonna take the whole one. And if we follow the structure, we can follow the high. We're gonna see how price is gonna react to that zone. For now we have a reaction. As we can see, we have an accumulation here. Price is making dojis. As we can see, after the delivery, we do not have any bump to the upside, so this will more likely fails. And as we can see, price swept all of its liquidity. And once price taps into the zone after sweeping all of that liquidity, price has the liquidity needed to follow the move. Also, we will have people that are gonna sell from this zone or from this zone, and that will create even more liquidity. And as we can see, price run into the high the same days. So this is basically how I choose my zone and how I do to choose my different zone when I trade the market. For example, if price decide to react from a zone that I choose to don't trade, for example this one, if price reacted from this one and create a nice break of market structure with a lot of momentum and create liquidity, I'm gonna look for entry into this new leg. If price reacts from that zone here, gives a pretty nice bullish move but fails to break, I'm gonna still wait for the extreme one here. the final chapter of this video, the smart money concept traps. As smart money concept traders, we are also subject to get traps. As you know, more and more people are trading the SMC, and it creates even more liquidity above or below the different POIs that we have in the market. So there is a common model that we can use in order to find where are the SMC traps, and this model can be changed. Okay, this for example could be only equal two equals, or price can create bid structure and then break. This is the common model that we have, but price change it a bit every time. As you know, every time on the market is a new one, so basically we have models, but price will not follow them 100%. So for the models here, we are in a bearish market. We are the price that is making lower high and lower low, lower high and lower low, and so on. Between that, we have different internal structure that has been created. What most people will do is they will simply follow the order flow, and when they simply follow the order flow, they will follow the last zone that makes for them the break in the market structure and that follow their criteria. But what most of the time price do is react from zone, give a bit impulsion before sweeping them. And why is that? Is because above or below the zone we have a lot of liquidity, and people most of the time are greedy and are in a FOMO. They want to be in the trade, so they take the POI that they find, but at the end it creates a trap and they take a sweep, and after they are afraid to take an entry above, or they take the entry also above, but they don't understand what they are doing and what's really behind the price. Okay, on the example here, as we can see, we made the change of character. Price after that accumulate orders before making an internal break in the market structure. What most people will do is that they will follow the actual order flow instead of waiting the liquidity to get swept. And the internal order flow will simply tell the people, then here we have a big push to the upside. Here we have a lot of liquidity to take back. So people will follow this zone here instead of waiting for the extreme one. And as we can see here, we have a pretty nice liquidity trend line just before the demand zone. And what market makers will do at this moment is that they simply push down the market. They induce the max people here to sell. It can be breakout traders, it can be with different indicators. And after this stage here, as they create liquidity, they induce SMC traders to trade from those area, which will create also liquidity. But here we have a better zone with momentum. We have the imbalance, we have the liquidity, and after the sweep of the liquidity, price get further back into the imbalance before going up.